Is that what it is? Too much pulled forward? What happened to Goldilocks and the roaring 20s? Or no one's talking about it. I mean, did President Biden kill the golden goose for investors by this tax thing? Which, you know, I don't know to what degree it's going to happen, if it happens at all. Something's going to happen, right? The market really hasn't been the same since it started fixating on all of this tax talk.
Well, there's a lot to unpack there. Let's first tackle the roaring 20s. I never bought into that. I thought that was an unreasonable expectation. The roaring 20s were about the single largest adjustment in individual tax rates in the history of the country. They were above 70% in 1921. Between 1925 and 1928, the top rate was 25%. So that's not the climate of now. What I think is going on in the market right now is about leverage. And it's about excessive leverage, to your point where you began the show. It's rolling in terms of correcting the excesses as it relates to leverage. I think it next moves into commodities. The bad news is, I think 2021, Scott, is very similar to 2010. You come off a year in 2009 where you got 25% for the S&P. You had earnings reported in April. Markets stalled out at that point. They were up 15% for the year in 2010, but much of that gain didn't happen until the other side of Labor Day. So I think we need to hear about corporate earnings. Is it reflation? Is it inflation? You're not going to know that until July. We could have 60 more days where the market is in this type of a move.
Joe, we just heard from
that. All being said,
we just had earnings, Joe. We just had corporate earnings, and they were great. We got to wait for earnings again as the next catalyst. I mean, come on. We're going to have a booming. We're going to have a booming summer here. What happened to this Goldilocks environment, which we heard from a lot of people about? This roaring 20s thing didn't just evaporate overnight. If we're working off our excess, are we not getting close to the point where we've wiped out enough of the excesses in the stock market? Because we worked over the NFT deal and SPACs. And, you know, Bitcoin is having its own issue today, and maybe that was next on the list. And the ARK stocks have had a big come down, too. I thought that stocks were nearing the end of this. This action today and over the last couple of days would suggest otherwise.
No, I disagree with that. I think, and the catalyst will ultimately have to be, you had a very bad reaction to extremely positive earnings. That's exactly what happened in 2010, coming off 2009's sharp rally. You need to next get positive earnings and see if you can get the strong response. You're obviously not going to get that until July. So, Scott, I think investors are unfortunately accustomed to having very fast corrections, very fast recoveries. This time around, to work off this excess leverage, you're not going to get it. Is there excessive leverage right now in commodities? Potentially. Is that the next place potentially that you're going to see it unwind? That could unfold. It's going to be like this over the next 2 months. That's my beliefs. All that being said, there are some things you could do in the market today, to Stephen's point. I think the semis are trading well. You could look at SMH. You could look at Lam Research. You could look at Texas Instruments, Fortinet. We held last Wednesday's lows for the S&P and the NASDAQ. That's the one positive thing, but that's just in the short term.
I hear you, but I'm looking at the defensive moves that you've made, right? I'm not talking about the stocks that you just mentioned. I'm talking about selling Pinduoduo. I'm talking about selling Uber. I'm talking about selling Coinbase. I'm talking about selling Pinterest. I'm talking about selling AMD, not where the opportunity to buy is, Joe, because that's not what my sheet says that you're focused on. You're defensive in this market.
No. Absolutely. Scott, you know me, and my background was as a risk manager. And first and foremost, I'm always looking, where can I mitigate risk? And I think this is still the environment. That's why I think it takes 2 more months, where the first question you're asking yourself is not how much can I make, but how much can I lose? I ask myself that all the time. And I think that's going to continue. Listen, nothing is happening in the market today that hasn't happened in the past. Markets are just a series of patterns that repeat themselves. And this is a pattern right now of deleveraging and corrective nature. And in that environment, you need to be a risk manager first.
Okay.